Hey, this is Kevin. In this video, I want to talk about why I buy OXY stocks over any other oil giants at this point. But before going into that, let's take a look at my portfolio, what I have done for the past 2 weeks, and how did it perform. Let's take a look at my portfolio for the past 2 weeks. So last video, I did not show my portfolio, so that's why it will be going back to 2 weeks, all the way from April 26th to yesterday, May 7th. Let's see what happened to my portfolio. So my capital gain actually went up from 110,000 to 166,000, which is a really pretty good performance for the past 2 weeks. That's about $56,000 gain there. And the total value now in my portfolio is actually 583,000 over on top over the 449,000 that was 2 weeks ago. So aside from like the additional gain that I got, I actually put in about like $78,000 more in cash. So where did the gain actually came from? Let's take a look. So of course, OXY, our favorite stock here, it actually went up from, let's see, 106,000 to 147, almost 148,000. That's about $42,000 gain for the past 2 weeks. I'm pretty happy about that. Looking forward for the Q1 report next Monday. Hopefully they'll deliver a good quarter. And the other one actually came from surprising ET. Like ET actually did a really great quarter and in the earnings report on Thursday. So the gain actually went up from like 4,000 to 18,000. So that's about $14,000 gain. But I like, as you can see, I did not purchase any additional one. So for OXY and OXY warrant for the past 2 weeks, I actually bought more of them. As you can see now, I do own 16,437 shares of OXY common stock. That's about like 3,000 additional from 2 weeks ago. And I have also been going into OXY warrant. So OXY warrant, I actually bought about 2,800 of OXY warrant for the past 2 weeks. Now it's total value at 36,000. Now I have like $7,800 cash left. But in fact, in the coming 2 weeks, I will actually be liquidating more of my Amazon stock that I got from work and to put into this account to buy more OXY warrant. So yeah, that's the update for me from my portfolio for the past 2 weeks. That was a great past 2 weeks, about $56,000 gain in total. Looking forward for more next week. So now let's go to take a look at why choose OXY over other energy stocks. Let's talk about why buy OXY, not other oil giants. 2 weeks ago, I got this question from Kalfa, who was watching my first video that I was talking about why I put all my money into OXY. So Kalfa asks why OXY among other oil stocks like Chevron or Exxon. In addition to this question that I got from Kalfa, a few of my buddies were asking me the same thing. So I thought it may be worthwhile to put a short videos together to share my thought process on why I think OXY is a better buy and what are some of the metrics that I use. So the first one, it's simply stock price comparison. I compare the price of the company of the current price to the pre-COVID price and to check what is the potential growth in terms of percentage. So in my comparison for this video, I use ExxonMobil, Royal Dutch Shell, ConocoPhillips, Chevron, and Occidental Petroleum. So let's take a look at Exxon. Exxon, the current price, it's at $62.43 and pre-COVID. So I was using January 12, 2020 as the benchmark. So at that day, the price was at $68.56. So the price difference to pre-COVID, it's only at 9.82% price difference, excluding dividend. If you want to include a dividend, which is currently at 5.71%, then you get 15% back. And let's take a look at Royal Dutch Shell. So Royal, it's right now the price is around 40 and pre-COVID it's around like 58. You get 43% gain excluding dividend. And if you want to include the dividend, you get around like 46%. This is actually another good potential growth to have. If I were to diversify my like energy share to something else other than Oxy, I will consider Shell. And if you look at other like ConocoPhillips, it's not that high. Like the percentage difference to pre-COVID, it's only 14% before dividend and 17 after dividend. Chevron is the same. It's only 5% to pre-COVID price. And if you include the dividend, it's only like almost 10%. But let's take a look at Oxy, our favorite one. Like Oxy, now it's only at 27.39 cents. And pre-COVID at this date is actually at 46. So there's still a 68% growth potential for Oxy just to get back to pre-COVID price. Although like they did cut dividend, but even after like if you look at the total growth percentage including dividend, easily you could see Oxy beats like this the second place by 23%. So the second metric that I looked at is free cash flow. So why this metric is important, it's because free cash flow tells you the amount of cash that the business generates for you. Imagine if you were to own the business at 100%, then simply you could also, if there is no debt involved, like paying off interest, paying off debt, stuff like that, then you could also view like this is the cash that you could actually take home at the end of the day from the business. So let's take a look at the amount that these 5 oil companies generate. Like ExxonMobil, the operating cash flow. This is the cash flow that they get from day-to-day business. And then capital expenditure is the amount of fee that the business have to pay to sustain its business. For example, maintaining the facilities, maintaining the drills, etc. So free cash flow is simply just operating cash flow, subtracting this. So with this, this is simply representing the amount that you could take home if there are no debt. So this value is important because imagine if you were to own the business 100%, you could use this to calculate like how much do you want to pay for the business. And if we take a look at this now, like ExxonMobil, it's generating $6.13 billion in free cash flow. This is the free cash flow that they generate in Q1. So all the numbers here that I got is from Q1 2021. And over here, you could take a look, like the market cap for Exxon is currently at 264 bill. And for the second company, Royal Dutch Shell, the free cash flow that they get right now is from Q1. It's 4.4 bill. And their worth at market cap is at 151 bill. And ConocoPhillips, the free cash flow is 1.2 bill, and they are valued at 77 bill for market cap. Chevron right now, it's the free cash flow that they generated in Q1 is 2.5 bill, and they are valued at 212 bill. And last, Occidental Petroleum. So like the Q1 earnings report is not out yet, but so I simply put my estimation here. I don't know, I cannot estimate like how much operating cash flow and capital expenditure that they will be. But from my estimation of like the oil price from Q1, I'm kind of like anticipating maybe they will get around $1.6 billion in free cash flow in Q1. But they are only, now Oxy is only being valued at 25 bill. So after May 10th, that's the day that they will announce their earnings report. We will have a more solid, accurate number in terms of operating cash flow, capital expenditure, and free cash flow. But as you can see, like I highlighted these 2 companies in yellow because if you take a look, based on my estimation, the cash flow for Oxy actually surpasses ConocoPhillips. But now, if you look at the value in terms of market cap, like Oxy, it's only a third of ConocoPhillips. So this is also a sign that it's telling us Oxy is vastly undervalued. So this is why I highlighted in yellow, but let's wait until May 10th, which is 2 days from now. Let's see how the earning reports come out to be. So the third one I looked at is the asset versus total liability. The idea behind this metric is to determine the financial risk, like how risky is the financial situation for the company. In situations like this, you always want like the total asset for to be over the total liability for the company's balance sheet. And in this metric here, I'm actually using Q1 2020. I'm sorry, not Q1, Q4 2020, because some of the data, they did not have the data for Q1 2021 yet. So I'm here like right now, I'm simply just comparing the Q4 2020. So let's take a look. So for Exxon, the total asset is 332 bill. The total liability is 175. So like the asset liability ratio is 1.89, which is healthy because this implies that they have their asset is actually worth more than their liability. So their asset could actually cover all their liability. And the same thing goes for Royal Dutch Shell. Their value at 379. Whoops. 379, liability at 222. So the ratio is at 1.69. And ConocoPhillips, the ratio is at 1.91. Chevron, it's at 2.2. And Oxy is at 1.3. So Oxy is actually at the lower end of in terms of asset versus total liability ratio. But if we look at the exact value, so the same reason why I highlighted these two, because ConocoPhillips and Oxy seems to be in terms of like similar size company. So if we look at the value, the total asset for ConocoPhillips is at 62, but the debt liability, which is at 32, which is healthy. But let's take a look at Oxy. It has 80 bill worth of asset as of Q4 2020. It does have more total liability. So, but if you were actually to compare the actual value difference in terms of value between asset and liability, Oxy it's 18 billion different, and ConocoPhillips is 29 billion difference. But just as I mentioned earlier, in terms of like market cap right now, although like a lot of the other metrics that Oxy is actually probably generating better more cash flow than ConocoPhillips, it's only being valued at a third of the price. So for me personally, I believe that Oxy is vastly undervalued. Although over here, like the asset and liability ratio is on the lower end, I think I'm very comfortable with that. So this is all I have for today. If you like the content of this video, please click the like button below and subscribe so you won't miss my future video. Also, if you have any questions or any thoughts that you want to share, please feel free to leave a comment. Thank you. Have a good day.